if you're into investing, you probably know who this guy is. For those of you who don't, it's Warren Buffett. And if you know who Warren Buffett is, you probably know that he loves dividends. Now, I want to tell you a number right here that's going to blow you away. So just in 2020, of the 36 securities that pay out a dividend in their 52 odd security portfolio, he will collect $4,720,296,790. So $4.7 billion just in dividends. What are we even doing out here? So today we're going to be talking about dividends. One of the first things I want to talk about is, what do companies do when they have excess money, or when they start making their earnings, they start collecting money and they're doing well? What are three things that they can do? They can either, one, reinvest into the company, so they can be buying assets, they can be acquiring new business, they can be investing in operations and tech and finance and different things, and trying to help the business continue to grow. They can, two, buy back some of the shares. And what this would do, if I'm buying back shares, I'm taking that bit of ownership and reducing the ways that the ownership is split up, so that each individual owner has more ownership in the company. So each individual shareholder has a larger percentage of the ownership. The third thing they can do is they can take some of those profits and the earnings that they do, or that they have on the shares, and they can pay back the shareholders. And so they do that in the form of a dividend. Some companies do that monthly, some companies do that quarterly, but they'll take what the profits are and they kind of profit share, and they'll take a percentage and a portion and they'll pay it back to each of the shareholders. So all of those are great. When a company is doing well, those are the things you want to see. You want to see them buying back part of the shares, you want to see them reinvesting in the business, or you want to see them paying out a dividend. It means that they're profitable, their earnings are coming in, they've got enough money to share and to split around, and they're making enough money and they're doing well. So what happens when a company isn't doing well? And we've seen a lot of this during the pandemic. We've seen a lot of companies stop their dividends, suspend dividends. And what does that mean exactly? So what I want to do is talk about the four main reasons why a company might suspend or lower their dividend. Reason number one why a company would lower or suspend their dividend is because of financial troubles. So we've been seeing a lot with the pandemic that a lot of companies are not pulling in as much money or as much business as they used to. Now, because dividends are paid out of their retained earnings, so the money that they hold on to and the money that they didn't expend during the year, if they're not bringing in a lot of money, or if they're not bringing in any money, a company might need to say, hey, we need to safe hold some of this in our reserves so that we can outlast this pandemic, or we can outlast this bad time. So we might need to stop paying out a dividend, or suspend the dividend for the short term, or lower it a little bit, in order to make sure that we have enough capital to continue funding our operations into the future. So that's reason number one. Reason number two that a company might need to suspend a dividend. Now, this would be because of unexpected expenses. Now, this could be anything from a lawsuit that comes in, a massive lawsuit that comes in that they didn't have the reserves for, or it could be time to update some costly and expensive machinery, mechanics, infrastructure, and all of those things. If they're super expensive, a company might need to say, hey, we need to pull from our retained earnings and pay this off, and we're going to suspend our dividend for now, but once all of this is paid off and done and we can continue to grow, we're going to reinstate that dividend and keep moving forward. Now, a lot of people will jump ship immediately as soon as they hear, oh no, the dividend's going down. That must mean some bad news. That must mean financial troubles. It might not necessarily be. It might be a short-term thing that once it's paid off and done, the business is going to run even better than before, and the dividend could continue to go up in the future, and the company could continue to make more money. So it's not always the end of the world, and it's not always time to jump ship. Make sure you're doing your research if you ever hear that a company is suspending or lowering their dividend. Reason number three why a company might suspend or lower their dividend. Now, this would be because a company really feels like they need to grow and they see an opportunity and they say, you know what, we're going to take this money and this retained earnings that we would have paid out as a dividend, and we're going to use it to really funnel growth. And again, it's that same retained earnings, and they have an option here. They can either reinvest it in the company and stay flat and pay out that dividend, or they can say, you know what, we need to suspend it or lower it for a little bit, and then we're really gonna jump on this next thing that we see that we really think is gonna expand our business. And in doing that, again, this is another scenario where as an investor, it might be scary, and there might be a lot of people who jump ship at the beginning, but you wanna make sure you do your research. If it's a sound company and their plan is to reinvest in the business and they have a solid plan and they really think it's gonna move forward and be better in the long term, it might be a good idea to hold on and keep buying a little bit more. Once they reinstate that dividend, again, you got all of that room for growth. And as the company grows and more money comes in, they can always raise that dividend further down the line. Now, the fourth reason that a company might suspend their dividend, this one's a little more scary. So it's a little complicated. There are two types of stock out there. There's common shares and there's preferred shares. And common shares have common dividend if they pay a dividend, and preferred shares have a preferred dividend that pay out a little bit more generally. So a company, if they're losing money and struggling, they need to make sure that they pay those preferred shares. One of the things they might have to do is say, we have enough money to pay the preferred, but we don't have enough money to pay the common shares. So our common dividends. So we might need to defer these payments. The problem with deferring payments is they might suspend the common forever, but they are obligated to make those payments to those preferred shareholders, right? So if they do defer those preferred, that's hard to say, defer the preferred. If they do defer those preferred dividend payments, they have to pay that on in the future. So they're fighting an uphill battle. So as our company recovers, they still need to be making those payments. So that one's a little scarier. If you're getting in a stock where that's the situation, it is a little bit iffy. Of course, it could just be in the short term. Always make sure you're doing your research. Always read the reports that come out. Make sure you're reading the earnings. If you're in a company and you're investing in it for the long term, take a look at that earnings report. Really try to understand it and do a little bit of research. There's a lot of interesting stuff in there. It might be really boring at first, especially if you don't know what you're reading. It's just a bunch of random numbers. But if you do a little bit of research, there's a lot of interesting things in there. There's a lot of interesting stuff in the dividend world. I really hope this was useful to anybody. If it was, go ahead, leave a like, leave a comment. If you have any questions, let me know. If I said anything that doesn't make sense, or you want to clarify, or you want to tell me that I'm wrong, because I might be wrong, I don't know. Go ahead, leave a comment down below. All you got to do, if you want to, like, subscribe, follow us on Instagram, listen to the podcast, Margin Call Media, do whatever you guys want, and I'll see you in the next one. All right, bye.